Bill Gates does tax and family business succession planning, so should you. But what is it? Do only the wealthy do it? Is it worth it? Hi there. My name is Kenner French, and I'm with VastSolutionsGroup.com. We marry tax, finance, and artificial intelligence to help entrepreneurs in their situation. Clients have said about us such things as, over the years, you have saved me approximately $1 million. Many owners of family businesses are so busy running their companies that they never get around to making formal arrangements to pass on business to the next generation or to their partners, as an example. But a failure to prepare for having to hand over the reins of your company, especially in the case of unexpected illness or death, can have serious financial consequences and may even result in a forced sale of the business at a discount. While the question of who will take over your business is central to a succession plan, it is equally important to plan ahead for the tax implications of a transfer of business assets to your appointed successors. Now, the systematic gifting of shares of stock in the family business is one of the most tax-efficient approaches to transferring the value of a company to the next generation. Under current law, you're permitted to transfer shares worth up to $15,000 to an individual child or grandchild each year without incurring federal gift taxes. For a married couple, the limit is $30,000. This process reduces the taxable value of your estate and minimizes any estate taxes that might be owed. However, any amount above these limits or transfer count against the estate tax threshold, which in 2014 is 5.34 and individual is 10.68. I should say in 2020. If you have no longer a time frame or a plan, you may be able to transfer a significant portion of your business to a family member through tax-free gifts while retaining control of the company until you're ready to retire. Another option is to arrange to sell your interest in the company to your heirs, either at retirement or in the event of a disability or death. The standard set by the IRS for transfers of business interests between family members is the bona fide business arrangement, as it's called. The sale of the company is not subject to transfer taxes, provided the business is sold at full fair market value, or FMV, and under terms and conditions typically associated with an arm's length transaction. However, complications can arise if you lend your family members the cash needed to fund the transaction without charging market rate interest on the loan, as the IRS may impose imputed interest income to both the holder and the issuer of the note. This can be avoided if your successors raise the capital through a bank loan or agree to pay you the prevailing interest rates of the loan. Now, to facilitate the sale of the company and to allow you to keep control of the business until you're ready to retire, you may want to consider entering into what's called a buy-sell agreement. This is a legal agreement that pre-arranges the sale of the business to a specified buyer who may be a family member or a current owner or group of owners or the business itself, any of the above. When a specified triggering event occurs, such as your retirement or death, the buyer is obligated to purchase your interest at FMV. Another option is to use a private annuity to transfer ownership of the business to a family member in exchange for the promise of a lifetime income for yourself and possibly your spouse, provided the value of the annuity is in line with the value of the business interest that is being transferred. The transfer is classified as a sale, and the value of the business will not be included in your gross estate for tax purposes. You may also want to consider a type of private annuity known as the self-canceling installment note, SCIN, through which the business is sold in exchange for an installment note that provides you with a set number of payments over a specified period of time and a set interest rate. You will die before the note is paid full, the note is canceled, and no estate tax is due on the remaining balance. Yet another vehicle for transferring assets while minimizing gift or estate taxation is called a grantor trust. Under the terms of a grantor trust, the individual who creates the trust or grantor transfer his or her assets to the trust in exchange for income for a specified period of time. Types of grantor trusts include grantor retained annuity trust, or GRAT, an irrevocable trust that enables you to make gifts and transfer the FMV of assets on a discounted basis to family members while receiving fixed annuity payments. Other types of grantor trusts are charitable lead trusts and the grantor retained, or GRUT, which is similar to a GRAT, but has variable rather than fixed payments. If your goal is to transfer assets while maintaining control over the business, you may want to consider what's called establishing a family limited partnership. After setting up a limited partnership to hold the business assets, you can transfer some of the limited partnership units to your successors, thereby removing the units from your taxable estate. Because limited partnership interests do not come with control of the partnership, the value of the transferred assets may be discounted for the purposes of gift taxes. If your business is operated as a corporation, you have additional options for passing on business assets to family members. A method sometimes used by corporations for transferring ownership while minimizing taxes, a recapitalization, or the issuance of two classes of corporate stock, voting and non-voting. The family members who are active in the business are awarded voting stock, while the non-voting stock is used to provide equity to the inactive family members. Given the complexity of these and other strategies for business asset transfers and estate planning, you should seek advice from a legal and/or financial professional to determine which methods are right for you. We, VastSolutionsGroup.com, we do specifically a lot of estate planning, tax planning, and succession planning for entrepreneurs. We have a proprietary AI model which can help in many instances, and when I say AI, I mean artificial intelligence, which can help in many instances to optimize the entrepreneur's situation and or his or her family, whichever is the priority in this case. If you're interested, check us on the web at www.vastsolutionsgroup.com, or one can give us a call at 888-808-8278, and we are obviously willing participants in helping you to better your situation. Thank you for taking the time to watch this video. It's indeed been a pleasure.